maybe my panelists can come with me and we can have an interesting conversation about banking transformation and how we've been evolving in the last years.
Absolutely.
Here we go. So it's an absolute pleasure to moderate this panel. One of our colleagues will be joining us shortly. There's been some logistical issues, but we'll sort them out shortly. Let me start by thanking all of you for being here, and let me continue by thanking my panelists and hopefully the people that will give us good insight about the future of the Greek banking sector. We have today with us Mr. Marco Angheben, Head of the Business Development and Regulatory Affairs at the European DataWarehouse. We have Mr. Ilias Plaskovitis, he's advisor to the Bank of Greece and a member of the Supervisory Board of the ECB. Mr. Fotis Kourmousis, Executive Member of the HFSF and former Secretary of Private Debt for the Ministry of Finance. And we have Mr. Theodore Athanasopoulos, CEO of Cepal Group and former Executive General Manager of Alpha Bank. Myself, I'm José Gasalla. I'm a partner at Wyman, spending my time here in Greece, historically between Spain and Greece, but actually just as of 10 days, I'm formally, officially here in Greece full time. So it's a pleasure. Let's start, if you want, trying to cover a little bit of the history of what has been happening in the Greek financial sector. Many of us are aware of that, and move gradually into the future of what's going to happen, right? If I may start, maybe a question for Mr. Plaskovitis and Mr. Kourmousis. Could you please give us some insight about sort of the evolution of the banking sector in the aftermath of the HAP securitization? So how are the NPLs numbers evolving? How do we expect the state to behave in the removal of some of the support measures, and even sort of more recently, do you feel that there's going to be any impact on the new geopolitical situation that we're living here in Europe, and if that will affect the Greek system?
You want me to start?
That'd be perfect, please.
Thank you, José. Well, I mean, 2021 has seen, of course, a spectacular improvement in the asset quality of the Greek banks. We had a very rapid reduction of non-performing exposures. I can give you figures that I'm sure you know, but just to underline the argument. End of 2020, Greek banks had on their balance sheets something like 47 billion of non-performing exposures. By the end of 2021, it went down to 18 billion, right? Which, as a percentage of the total loan exposure, it's from a ratio of 30% down to about 13%. And all our banks have published business plans that will, if properly implemented, lead to single-digit NPLs by the end of 2022. As a matter of fact, the first quarter, and I think this is the first time we give some figures of the first quarter of 2022, this trend is continuing. Actually, we have a further 5% reduction aggregate in the system of NPEs compared to December 2021. However, I must put a however here, because we expect that by the end of the second quarter of 2022, there will be a termination of the remaining state support measures that were offered to pandemic-affected borrowers. And I don't feel that this will have a zero impact, because some of them have been quite substantially supported. We, of course, also all know that inflation is eroding income power certainly for physical persons, but also it may create problems to some of commercial borrowers. We may see kind of a reversal of the picture by the second half of 2022. It will be a temporary one. I don't think that this kind of, let's say, setback is going to be something prolonged, but I cannot exclude it. It's interesting, of course, that even in the first quarter of 2022 that I have the data, we saw an increase of fresh new MPs inflows of the order of 4.2 billion, which sorry, not in the first quarter. That would be too much. Let me check the exact time period. Throughout 2021, we had 4.2 billion. That's the right figure. So in 1 year, we have fresh MPs and redefault of already restructured loans of the order of 4.2 billion, which is comparable to previous years, actually. So 2021 has not shown any dramatic, let's say, worsening of the situation of the borrowers. I would say, given the fact that part of the year was still under the pandemic effect, this is quite a good performance. As I said, it's a figure comparable to previous non-crisis years. Now, I would like to finish this first intervention by saying that we also have some very good news about the prospects of the tourist sector this year. As you know, tourism is a very important and interlinked sector in the Greek economy. It affects, from farmers to providers of all sorts of goods beyond the hotels and all this. They argue that they expect 2022 to be maybe at the level or even better than 2019, which was a record year. If this happens, then of course we will have a strong boost. And I would like to stop at this point and see what the colleagues have to say. Thank you.
Absolutely. As a Spaniard, I am increasingly seeing that shift of tourism to Greece, and as I'm going to be a member of the community here, I'm pretty happy of that. So, Mr. Kourmousis, any additional thoughts on the evolution on the banking system from your actually bird's eye view?
José, thank you very much. First of all, let me welcome you to Greece, since you will be staying here. I hope you like it. And also welcome to all our participants today. It's been long since we had a face-to-face seminar. For me, it's more than 2 years due to the pandemic, so it's a bit strange to have you all back together. I agree with Mr. Plaskovitis. There are all these risks that we see, geopolitical risks. And for Greece, the situation maybe seems even more difficult because we had one crisis after the other. We had the 10-year crisis, and then the pandemic, and then the energy and the war, and one after the other. So it's, I would say, the compilation of all this one after the other. However, during this crisis, the state implemented several support programs, like the bridge scheme and other schemes, which increased deposits, increased the available income of households and businesses, reduced costs, etc., etc. This, in combination with very generous EU funding from the Resilience Fund, from the structural funds, etc., etc., let's say, provide the buffers to reduce these risks so that NPEs are created, but in pre-crisis levels, as Mr. Plaskovitis explained. For sure, we have the hub scheme is still in operation until October 2022. So already 9 transactions have occurred, and maybe half of them are still pending. So we have the tools to utilize to address all these risks. So if banks are needed, they can securitize their NP portfolios within this year.
Excellent. Yes. We're still seeing some of those come to market. I'm going to link that response and I'm going to ask Mr. Athanasopoulos about, well, we've seen that reduction of NPLs in the banks, right? What that has meant is that it has shifted into private investors that now hold the majority of those books. How do you see that NPL market evolving, right? Things like the secondary deals that we're starting to see in the market, and an interesting topic that happens to appear in many conversations I'm recently having around the reperforming portfolios, how they will behave and what we should be doing with them.
Well, I'll rephrase a little bit the question is how you will see the market evolving. I would say how will the market mature? And I always like to see things in context. And I think what happens in Greece is that we had a very big crisis without having a real NPL framework. We established an NPL framework. We established units within the banking system that they were dealing with NPLs. We tried, and you gradually understood better NPLs. Then we had a servicing market. Then the regulator has put pressure, right accurately, I would say, and the banks, after understanding better the portfolios, they realized that there are, in essence, different options. There's working them out, converting them on REOs, and selling them. Then we had big securitizations of NPLs, which they had the government guarantee attached, same as Italy in hubs. And gradually the servicers, in a more mature market, they will work out portfolios, create real estate portfolios, repackage portfolios, and as part of this repackaging process, they might resecuritize or sell. So I think we do have this tendency of focusing on the new things coming in the market as if they are something new in the world, in the system. But in essence, it's just that the market matures and all options are put in place. So the same way that the banks at a certain point worked out, restructured, liquidated, created REOs, and started with sales, the same thing will gradually happen based on a strategy on its securitization or even portfolio bought by investors, because it's a financial play at the end for investors. And what we will see, we will gradually see all solutions, including secondary sales. A subset of secondary sales is also the reperforming portfolios. So you might be having, we kicked off the market as Cepal with what I call a forward sale of auctions, which was our first transaction. Now we're seeing the market unsecured trades, which they follow exactly the same logic of the unsecured sales of the banks and of the system globally. And now there is a discussion on whether we will go to repackaging cash flows, which means reperforming. So I think that this will happen. We need to create data points and we need some time for that, and we need very good preparation, especially on data. But in essence, it's not something new. It's just that the market matures and evolves, and all quote-unquote options and weapons are being put in place. So it's an evolutionary step, which starts with the system, the banks, the regulator, the servicing industry, and now we are going into this market. And I think ultimately, well, this is for Mr. Plaskovitis' comment, the more this market becomes mature, the more stable the system becomes for any forthcoming crisis, because you need to have all constituents. So I do believe that this market will pick up, not because it's a peculiar or something specific, just because this is what happens around the world. and we're just moving to that direction.
Absolutely. Let me introduce our final panelist, Mr. George Kormas. He's the the CEO of Piraeus Real Estate and a general manager in the bank. Thank you.
Good morning.
Good morning.
Sorry for the delay.
Absolute pleasure having you here. Maybe, if okay, and sorry for the
Fine.
rushing you into it,
No.
but I can.
I'm in a rush anyway.
I can relate to Mr. Athanasopoulos' reply on how the market is maturing and hopefully guide that conversation also to the real estate space and how that's also, from my perception, maturing, but I'd like to gather your view. So we're seeing a market that historically has been able to shift the NPLs out of the banking system now into the securitizations. And what we're now starting to see is conversion of many of those assets into the collaterals that are behind them. And we're starting to see the real estate side of the NPLs, right? That comes in a market that has, for the last few years, been picking up, right? So probably some interesting tailwinds. So the question to you would be is, how are you seeing this real estate market? How are you seeing the prices? How are you seeing also the evolution of financing for real estate, which is going to be very relevant to make sure that this evolves correctly? And sort of a slightly more, maybe slightly controversial part is, are we seeing this to be behaving sort of equally in all parts of the market, or are we seeing more of a dual market in which some places are picking up better than others, right?
All right. Okay, thank you very much. Good morning, everybody, dear panelists, friends. It's a very interesting question, the one you just addressed me with, and I can imagine what Mr. Athanasopoulos or Mr. Plaskovitis have already commented, or Mr.
You missed the best part.
I missed the best part. I will watch the video, I promise. But we have had extensive discussions and with you, sir, as well. And we had extensive discussions on these issues, and it is indeed a problem that needs to be dealt with. The real estate market, after some dark years, along with the sovereign crisis that then became a banking crisis and so on, the story that we all know, after this deep recession, had a very promising outlook, which has not ceased up to now. Although we went into the phase of COVID and then the issue with Ukraine at the moment, this does have an effect already on the market. It has stopped the positive effect of it up to now. But nevertheless, we have a very young market, I would call it this way, for real estate. So the potential is indeed there. Okay, there are some impediments, which we all hope that they will soon cease to exist so that it can take the way it belongs to. What I mean to say by that, Greece has always been, or has been in the last years, the destination for many investors, real estate investors, and this can be seen in the part of the foreign direct investment that went to real estate. The huge part of it was referring to real estate, and this will not cease to happen in the future, this is my opinion. So as of that, the general outlook of the market is positive, but nevertheless, we need to mention that it is a shallow market, which means that few transactions can change the picture. We hope that it will soon evolve, and now I'm coming to your second part of the financing, with the support of the Greek banking system, which is in a very healthy situation right now, and it has promised and does it in the praxis as well, in supporting and providing financing for real estate. I would like to open a parenthesis here and say, and build on what has already been said before, that the Greek banking system has learned from the lessons of the past. What I mean to say by that, you correctly said that the majority of the non-performing loans, or the majority of the loans granted in the past, were collateralized by real estate. In Greece, it is a straightforward relationship. There you have a piece of real estate, you can do some financing. As of that, and there were mistakes done in the past, those don't seem to exist anymore. There is an enriched and strength regulatory framework, as probably already said by my friend Ilias, which does secure that mistakes of the past will not happen again. Because indeed, and now I'm going over to your third part, the problem has already been, or the current problem is with, through the transformation, through the foreclosure process of non-performing loans to real estate, it is the quality of real estate that is underneath. What I mean to say by that, if you have a loan and you have a collateral is like a big bag. Nobody really knows what is exactly in there. You know, more or less, it's a collateral, it's a real estate, it's a, let's call it an apartment. But when it comes to the foreclosure process, the show begins. And the show is not nice always. Because as soon as you open this bag, there is no way of return. You need to legalize it, you need to take care that all square meters are in the right order, and you need to run a legalizing process, and so on. The so-called REO management. And this is the day after. This is what we are looking for, and make sure that it works the day after. Because as I said, as soon as you open the bag, then there is no way to return. And this is something that has not been, in my opinion, very much understood by all involved parties. Most of us, including myself, I'm not somebody who points on others, say, okay, this is nothing. I mean, you can have it legalized in 2 months and get it to the market and have a nice piece of real estate to bring it to the market. It's not the case. It takes ages up until you have reached the maturity level needed in order to reach the market. I have seen by some of the participants that they do hit the market with real estate that is not yet in the stage of reaching the market, which is the wrong way to do things. I can understand their impatience, their wish to make a transaction, but you cannot make a transaction, and as soon as you have something on the market which is not transactable in market terms, there is no need to have it there, because this creates an inflation of prices, I would say, as well, and of items on the market, and it creates the wrong idea. I would like to close this initial remark with your last question, as with regard to the geographical coverage of what's happening. Banks have obviously granted loans all over Greece. As of that, the picture we are getting is the following. There is a general increase, a tendency, I would call it a tendency, throughout Greece to increase compared to the lowest part of the curve that has been reached. What is unfortunately, though, being only very well spotted and discussed are certain areas that have shown an immense increase. And this is where I say we shouldn't be focusing on certain areas only, meaning the south belt of Athens, for example, everything facing the sea, or the area around Acropolis, because it is obvious that this is driven by foreign direct investment and by foreigners. And it is obvious, if you come to Greece and buy a property, what would you like to see? You would like to have a view on the sea, or see the Acropolis, or an ancient part of the city, obviously. But what happens with the rest? Because the majority is elsewhere, it's not there. And this is where we need to draw the attention and make sure that banks, through the correct financing channels, are there to support the growth elsewhere as well. Indeed, real estate is highly correlated with the economic growth of our country, and the outlook as of that is definitely on the positive side. So I have a positive note to contribute and say that we are on the right path. We need to be a bit patient. We shouldn't be saying much, wow, it's great, the real estate is doing fine, and so on. We need to look at the figures and make sure that the real estate that reaches the market has a pace that doesn't create local bubbles. Because I said before, it's a shallow market at the moment. It doesn't have the necessary depth to absorb huge masses. I'm sure that huge masses will never reach the market because of the legalization process, because it takes ages. But at some point in time, this will regularize, and there we need to make sure that we do correctly portion, we, meaning banks and obviously the servicers or anybody else holding real estate in both forms, either in collateral form or REO. And this would be something I have to say.
Thank you. Thank you very much. I think that getting that speed correctly in all of the sites is going to be very relevant. The offer and also the lending for the buyers to come. We're all going to be closely looking at it. Let me move the conversation to Mr. Angheben. You have a European level view, right? You're seeing the evolution from the European data warehouse, so you're getting access to a lot of information. Maybe let me start with a question to you, because we just have new EBA templates. It'd be lovely to gather your thoughts on how they will impact the market, how they will bring transparency to the system, and how that can, on the positive and on the negative, if there's any, bring changes to the market.
Thanks, José. And I should say I'm delighted to be here in Athens. Finally, I see the sun, because I come from Frankfurt. What I'm going to say actually are comments, my personal comments, not on behalf of European DataWarehouse, because the European DataWarehouse is a Eurosystem repository and also is a securitization repository under ESMA and the Financial Conduct Authority in the UK. A very valid question, because interestingly enough, it's absolutely true, and I agree with all my fellow panelists here. We had very good measures in every single jurisdiction, and they worked in every single jurisdiction because, as was correctly said, we have different judicial systems, and hence the pace of the recovery of the workouts is completely different depending country by country. So we need to have clearly local lawyers that understand the whole process and procedure. But we are talking here about temporary measures, because even if they've been very successful, these are, let's say, as we heard, they have a limited period. They could be prolonged. We have seen the GACS has been prolonged from the Commission, etc. But what I think is the European Commission is doing, and the European institution, including European central banks, they're trying to look at, and the European Banking Authority, they're trying to look at a systemic solution which is long-term. Not because we had a crisis, not because we had the crisis of 2008, and hence why European Data Warehouse was created. But I think now we have the NPL Secondary Market Directive, and one of the mandates to the European Banking Authority is actually to create and to develop some specific templates. These have been out since October 2018. However, they've been optional. And as we know, optional things tend to be not implemented. So if I maybe ask you, of all of you, of how many have implemented the templates, and I'm sorry I cannot see you because I have the lights exactly in my eyes, I guess not many of you probably have used these templates. However, what is going to happen, and thanks for the question, now there is a consultation out, And I would recommend all of you really to take a look at the consultation, because in a sense, this is the last chance. It's written also in the paper. Even if the templates are still potentially going to be optional, it's very clear that they're going to be part of this infrastructure, the NPL Secondary Market Directive. And as European DataWarehouse, for example, we have been already implemented the previous versions of the NPL templates. But what is the missing piece in the puzzle here is the incentive. You guys have been using Greeks your own templates. In Italy, we have been using the GACS templates. So we need a form of continuity, because let's not forget that producing data, and the correct data, is timely, consuming, and price. It involves a lot of money. Hence, it's a very good opportunity, because even if EBA has reduced dramatically the number of the fields, for example, we have been involved doing a survey with all the banks across Europe. But please, in a sense, I ask you, we have this deadline. Unfortunately, it's 31st of August, so it's smack in the middle of the summer. But please take a look at the template and comment on it. We are also going to file a letter ourselves, because we are going to try to have continuity with the current templates from ESMA, from the securitization side. And we are going to also try to have continuity with the templates or the way that you have been reporting for the Greek scheme and also with the Italian scheme. Hence, we are trying to reduce as much as possible the reporting burden from all the banking systems and all the other players.
Excellent. José, if I may.
Please.
I would just like to connect that with the secondary market and make the point that NPL investors are international investors. They're not Greek-related investors. They have an allocation for Greece, but their opportunities hover around the continent. So data provision and common data templates will allow investors to take better decisions, especially in a market like now, where opportunities pop up around the world. So, it's not just whether you're doing a trade, a secondary trade, it's also where this secondary trade in terms of risk return data stands versus other European trades out there in the market. So having said that, I think everybody should focus a lot on this new directive about templates, data, and alignment of reporting, because ultimately the same investors invest here, in Spain, in Portugal, in Italy, and at a certain point they will just allocate capital on a risk-reward type of... so no matter what we do as a country, we need to have the same level of information with our peers.
So.
Yes, I would like to add something on what Marco correctly said, and I fully support and strengthen this approach. Obviously, it is the best thing to have a harmonized approach as with regard to the potential investors, because it's easier. We have seen this happening back, like too many years ago, with accounting standards. We had the US, the European. I was part of the European, trying to push the European standards out, but nevertheless, we see that you need to have a unified basis where you can make quick comparisons and decisions. And coming back to what Marco said, the time is now to make the comments. Why is it important? Because as soon as templates or the entire system or the gateway is closed, then it is a given fact, it's a given thing. You cannot change it anymore. And it is better to get involved now, put your input, because the pan-European outcome of the evaluation of the future worksheets and templates is going to hit you back in a couple of years' time from today. And then you will not have the opportunity or the possibility to intervene and say, oh, well, hello, I have a difference here, this is not reflected correctly. And then you start the European comparisons, you see where you stand, and you say, oh, this is not representative for me. Yeah, it's not representative because the template might have needed your input at the first stage. That's why I wanted to just strengthen what Marco just said.
Absolutely. If we have this tendency of not answering when we're being asked and answering when we're not being asked. I put it on myself first. We've covered a big evolution, right, from where we started, the reforms, how the market is evolving on the multiple spaces, and how the European sort of standardization of data is gonna help. Let me, before we open for a round of questions to the audience, one last question for the full group, because I think the different views from the group will be constructive. We've just discussed all the improvements that have been happening in the Greek financial system. So the question is about the future. How do you see profitability, and how do you see what areas should the Greek banking system focus on going forward? Things like, whatever, taking a benefit from the new interest rates and the evolution of GDP, the transformation that many of the Greek banks are experiencing and have been working for the last years, and sort of EU-level initiatives like restructuring platforms, or even the capital structure, and how that could be shifting going forward, given the tailwinds that we're experiencing. Let me start maybe with the last one from that side, as probably closer.
I think we could safely say that banks have been doing well, Greek banks. Still, even the latest, even taking into account the latest trends and events, the stock prices are doing quite fairly well in comparison to other EU peers. So this proves that the Greek banks have been resilient through all these crises. I believe for the future it is important to focus on digitalization. This is very important, and the pandemic helped also customers to become more digitally, let's say, experts, or at least move away from traditional operations like going to the branch, and etc., etc. Another very significant is incorporating ESG criteria, because all the EU funds, more than 70 billion, have a prerequisite to transform and sustainable banking, incorporate environment, social and governance criteria. So I would say these are the main two, and I leave some room for the other panelists as well.
Maybe we continue in this.
Well, difficult for me to comment on this one. I will just focus on one thing, because I think Fotis and Mr. Plaskovitis are more the experts on this matter. I think that there is a peculiarity as the aftermath of the crisis in Greece, which is that a big part of the private debt is under restructure or under liquidation outside the banking system, which is also a big proportion of our overall GDP. Okay, so we might have seen NPLs going down, but in essence, private debt is not extinguished. And if we consider that trades and securitizations are 67 billion, we can understand that 70 billion in a GDP economy, in an economy with GDP of 170 billion, are outside the banking system. Some of this will be restructured, some of this will be paid off, some of this will be liquidated. I think there is a combined bet, given this structural thing of the Greek economy, which goes to the banks and the regulator, and it is about finding the right equilibrium between criteria, methodology, and not supporting securitizations. That is finding an objective way to assess on how reperforming loans can re-enter the banking system. I think, apart from whatever Fotis have said, and of course I'm a little bit biased on my point, finding the right set of rules for this transition of part of the economy, if required and if triggered, to go back into the banking system is really important, not for the Greek banking system, but for the Greek economy as a whole.
Well, I mean, I've been invited As someone who belongs to supervisory authorities, I will, I will take up this role a little bit and maybe say a couple of words from the supervisory point of view. Certainly, we expect an increase, a visible increase of profitability in the coming months and years for the Greek banking system, almost automatically because of the reduction of the cost of risk in their balance sheet as non-performing exposures have been reduced so much. There are also, of course, opportunities for credit expansion. We all know the RRF, the new funds coming from the EU. So there is a good prospect there. Now, returning to the supervisory conservatism, I would say that certainly we would like to see a better performance in setting up early warning systems that will somehow indicate problems for a borrower before they actually manifest itself, because this is very crucial, especially in periods of uncertainty like the one we are now facing. This is one area which I think a lot of improvement can take place. Secondly, I will take up the point that Theodore Athanasopoulos just mentioned, that we certainly need to see more of organic solutions. There is now a huge population of non-bankable borrowers, which is not only a problem for the real economy, but it's potentially a problem for the banks, because if we're talking about credit expansion, okay, big corporates, I don't know, public projects and so on offer some opportunities. But if you exclude, I don't know, something like 60% of the SMEs of the Greek economy from the banking sector because of their non-performing status, well, I think it narrows a lot the potential and the market at which banks could access. So this is an area. Now, I know that people like Mr. Athanasopoulos who are doing that every day, they say, okay, it's easier to say it from outside rather than doing it. And I understand that not everybody is viable, certainly not, and not everybody is cooperative. I mean, from the point of view of the borrowers, certainly not. But still, among such a big population, I'm quite sure that we could find win cases. There is another issue. All services here in Greece, they do not seem to have within their business plan the possibility of refinancing viable non-performing enterprises. And you know, the banks are very hesitant to do it because that would, according to ECB and EBA rules, would immediately increase their NPEs, because when you finance a non-performing borrower, it's a non-performing exposure for some years at least. And so they don't do it, services don't do it. Capital market is not a question for small enterprises. So there is a gap there. There is a gap there. And finally, I would like to say that there is also room to improve profitability via containment of operational costs. We're at a good level. We are better than the EU average cost to income. And especially if we have an income expansion due to credit expansion, that will improve automatically due to the denominator. But we still, I think, have room, especially in the area of digitalization, which I know is a priority for all banks around the world. But certainly Greek banks have quite a bit of ground to cover on this area. We had an unprecedented experience as a result of digital transactions due to the pandemic, and the lockdowns and all this. So this, I think we can build on that experience and make a more permanent thing. Plus, and I finish there, when you digitalize, you expose yourself, of course, to greater cyber risks. And this is also something that in Frankfurt, the ECB is, the SSM is now paying an increasing amount of attention because there could even be geopolitical issues relating to cyber risk. That is not cyber risk simply for fraudulent private entities, but even some, big public players could be involved. So we have to be careful there. Thank you.
I couldn't agree more with what what has already been said. Indeed, the Greek banking system has gone through a serious transformation process. We have been focusing on cost reduction, and we had some huge positive effects there. And obviously, the ESG part and the green economy, as proposed by the European Commission and the Green Deal at the pan-European level, is there, and we fully support it. There is room for improvement through the new funds and new businesses, but as I said before, all this is relating to the growth that the entire economy will show. What needs to be stated is the fact that the Greek banking system has been reshaped. It has a better cost ratio. It has enough funds to be there and finance all viable future investments, viable and green, obviously, according to ESG. It needs to deal with the problems of the past. It was a huge and great deal to get the NPLs out of the balance sheet, but there is always a but, unfortunately. We should be, and this is, I would say, a key takeaway of today's discussion, we should be protecting the quality of the new reborn balance sheet after the NPLs have gone to third parties. Yep. And this can only be preserved through targeted and correctly assessed new financing deals. We shouldn't be out there financing everything that comes on our desk, which is not the case because, as Ilias correctly said, the supervisory background is enhanced, and I'm happy to see that because of my past. I was in the central banking business before, so I can never get out of this shirt.
We miss you.
Thank you. I miss you too. And the positive effect is the following. Yes, they are there according to new criteria, new framework, and they stand ready to support the ESG and green approach that the entire country now reaches out to, and this is in cooperation, obviously, with the European community.
Lovely. Any European-level views?
No, it's difficult to comment because all the things, so I don't have really much to add, but I'll be very quick. So I think if I have a dream or if I have a wish, I think we should try to work all together. Clearly, we are all involved in the renovation wave, but I think it's, to my mind, that's lessons learned from, let's say, the past work that I've done. It's, I think we need the centralization of the data, accessibility of the data, and third but not least, also data quality. That's what European DataWarehouse is all about, because data quality is absolutely crucial. The other thing I want to mention is there is actually an excellent paper that has been published from the European Central Bank from Fernando Gonzalez on the empirical study of securitization of non-performing loans. It's very interesting because it looks at all the information that the SSM has been looking for with the 50 transactions, Italian, Greeks, and from other countries. And there are clearly a lot of lessons learned. What I think is one of the issue that he wants to make is, are we able to collect all the data also post-issuance, the performance? Can we compare how services are doing? And is this information available? And I think in his paper there are a lot of the solutions of the things that we discussed here today.
Absolutely agree. Some of us have been working on that space for quite some time. It's been an absolute pleasure. I would have liked to open to the audience, but I'm going to get killed because of the timing. So maybe we can have some of those questions over a coffee. Let me just end with a remark. I've been following this conference and attending it for quite some time, and it's incredible to see how we have been able to shift the conversation from this is a huge problem and we're trying to solve it to we're starting to look ahead and how we can see a post NPL world in Greece and how we can grow and become more resilient out of it. So thanks a lot for all the commentary.
Thank you very much.